So once again, welcome back to the session, everyone. So we will be starting with the other areas of AA. And in the last day session, we have already gone through the areas of audit risk reporting. And in addition to which we have also discussed about the core topic of AA, that is the area of substantive procedures. And today we will be primarily focusing mainly on three areas. That will be the area of internal controls, ethics, and corporate governance. In addition to which, we will also be going through the multiple choice questions as well. So first of all, let's start with the area of ethics directly. And from ethics, we'll move on to the area of corporate governance. And finally, we'll discuss the area of internal controls. So basically, when it comes to the ethics part, well, we have studied, it is mandatory for every professional to follow ACCA's Code of Ethics and Conduct, especially the ACCA members. And there are 5 ethical principles or 5 fundamental ethical principles or 5 principles of professional ethics. It can be asked in any manner. And this have been asked for your exam multiple times as direct theory question. So, well, we know that there are 5 fundamental ethical principles. First one is integrity. And as the term itself suggests, the integrity means that the members should be always straightforward and they should be always honest in all their professional and business relationship. Then when it comes to objectivity, it means that members should not be biased. They should always be focusing on what their professional or business judgments are, and they should never be biased, or there should not be any conflict of interest, which means their interest should always match with the interest of the auditor itself and not with their professional interest. When it comes to professional competence and due care, it means that it is the responsibility of the auditor to maintain knowledge. They should always keep on up-to-dating their knowledge. And whenever you perform a particular work for the client company, you should always be using the most recently updated standard. And members should act diligently, which means you should always be complying with the technical and professional standards, and you should accept the work of a client only if you have got knowledge with regarding that. Then when it comes to confidentiality, it's mainly 2 things within the confidentiality. First thing is that when you have obtained a particular information from a client company, you should not disclose it to any third parties. That's the first thing. Secondly, if you have obtained any information from the client company, you should not use it for any other purpose other than for the purpose for which you have obtained the information. So you should not use this information for any other purpose other than the purpose for which you have obtained it. And you should not disclose information in relation to a client to a third party. You can disclose the information in relation to a client to a third party in basically in 2 cases. First of all, if there is a legal or professional duty, or if there is approval from the client, in that case, you are allowed to use, or else you should not do that. And when it comes to the professional behavior, it means that the members should always be complying with relevant law and regulation. The members should not do any act which may discredit the professional body or ACC as a whole. So these are the 5 fundamental ethical principles about which you should be having clear picture about, because you'll be getting direct question from this area. And right after that, we have studied about the ethical threats. So we have studied that there will be 5 ethical threats that the auditor might need to face during the time of audit of financial statements, which includes self-interest, self-review, advocacy, familiarity, and intimidation threat. Out of which, let's start with the first threat, that's family and personal relationship. Well, we know that if the client company has a family or personal member of the auditor, definitely he might act in favor of them. If the auditor is being offered with a gift or hospitality service by the client company, auditor might provide a favorable opinion for the client for getting that gift and hospitality service. If the auditor have received any loan and guarantee, the auditor will always be having a fear that if the auditor have provided an unfavorable opinion to the client, the auditor might be requested by the client to pay back the whole amount of loan. So in that respect, auditor will provide favorable opinion for the client. In case of overdue fees, auditor will be having a fear that if we have provided a non-favorable opinion for the client might not pay the prior year's auditing fee, which is outstanding. So we'll provide a favorable opinion. But on the other hand, we can also explain it in another way, that if the client company is not paying the prior year's audit fee, the auditor will be having a thought that even the current year audit fees will also not be recoverable at some point. So the auditor will reduce the quality of the audit in order to reduce the cost of audit. That can also lead to self-interest rate. Then percentage or contingent fees. Consider that the client company is paying the auditor 5% of profit as audit fee. So in that case, even if the profit is misstated, auditor will not be willing to correct that, because if the auditor have corrected that mistake, definitely it will reduce the auditor's revenue. So the auditor will not be willing to do that. So it will give rise to self-interest rate again. Then when it comes to high percentage of fees, consider that the audit firm's total revenues, 15% of fees is provided by a single client for the past 2 years. So for 2 consecutive years, if we are getting more than 50% of the 15% of the audit fees from a single client, then that's a high percentage client. And the auditor will never be willing to leave such a client. So auditor will do anything in favor of client to retain them. So that is something called high percentage fees. So when it comes to lowballing, there's always a possibility that auditor will reduce the audit fees in order to get high number of clients, and proportionally he will also reduce the quality of the audit. So reducing audit fees is not lowballing. Reducing audit fee and proportionally reducing the quality of the audit will result in lowballing. Then consider that the auditor have appointed a staff member to the client company's accounts team. So in that case, that particular client might have done some sort of mistake in the company's financials. And in that case, the auditor will not be able to talk against the particular accountant because he was appointed by the auditor itself. So it might affect the auditor's credibility as well. So the auditor will talk in favor of the accountant itself. So it will give rise to self-interest rate. Or consider that if we have got a financial interest in the client company, again, if the auditor is having share investment in the client company, if the auditor provides an inappropriate opinion, like if the auditor provides a modified opinion, it might reduce the share value. The auditor might face financial loss. So to avoid this, he might talk in favor of the client. If there is close business relationship, employment with the assurance client, partner on the client board, in all these situations also, there can be chances of having self-interest rate. And as an auditor, we need to take adequate safeguards in relation to each of the thread. Say, for example, when there's a family or personal relationship, whoever be the person who creates the family or personal relationship should be removed from the team. Say, for example, if the audit team is having a particular audit manager whose wife is working with the client company, in that case, the thread, we can remove that particular auditor from the, particular audit manager from the team. Then in case if the client is providing us with a gift or hospitality service, we should politely decline it. If we are having a loan or guarantee, we have to obtain an external review of the work which we have undertaken. If there is any overdue fee, it is mandatory rule by ACCA. Overdue fees is not at all allowed. So if there is any overdue fee, auditors should not continue with the engagement until the fees are being paid. And percentage or contingent fees is strictly not allowed. The fees should always be a fixed amount, or it can also be based on hours spent by the auditor for the purpose of performing the audit. In case of high percentage fees, we have to obtain external review of the work done. Lowballing is not allowed, and the fees should always be adequately be enough to recover the expenses that we have incurred for the audit. In addition to which, the external review of the work also should be carried out. Recruitment services should not be done. The auditor should politely decline the request if it is raised by the management. If the auditor is having any financial interest, in that case, the auditor needs to dispose of the whole interest in shares. Then only they will be able to take up the audit engagement. And in all other situations also, we should not do any act that way affect the personal interest of the auditor. He should always be giving importance for the professional interest. So this is how we will be considering the self-interest rate. Is that clear, everyone?
Yes, sir.
Yes, sir.
Then next one is self-review thread. So basically, when it comes to self-review thread, the self-review thread will arise only if the auditor is reviewing his own work. Consider that we have prepared the client company's accounts, or we have provided a tax service, we have provided a corporate finance service, or we have recently worked with the client company, we have provided any general services, we have provided or we have implemented the client company's internal control system. In all this situation, if the auditor have already carried out a work for the client and auditor himself is reviewing that particular work, in that case, definitely he will not be willing to spell out the mistakes in the financials, right? Because nobody will be ready to criticize their own mistakes. So it will give rise to self-review threat. And as a safeguard, when it's a listed client, you are not allowed to provide any other service other than the audit service. Consider that you're auditing a listed client and it is mentioned in the scenario that the auditor need to take safeguards. So there is no safeguards. The auditor should not accept that engagement. But it's a non-listed client. Then in that case, you can provide the service by taking separate engagement team. Engagement team who is performing the accounting services should not be involved in the audit team. By using separate engagement team, you can avoid self-review threat. Is that clear, everyone?
Yes, sir.
Yeah.
Then,
Sir,
when it comes, yes, please.
sir, tax return, tax advice, like case
എന്താ അവിടെ ഡൗട്ട് ഉള്ളത്?
ടാക്സ് റിട്ടേൺ ഏത് ത്രെറ്റ് എങ്ങനെയാ വരുന്നത്?
ടാക്സ് അഡ്വൈസ് കൊടുക്കുന്ന സമയത്ത് ഫിനാൻഷ്യൽ റിപ്പോർട്ടിങ്ങിന് അഫക്ട് ചെയ്യുന്നുണ്ടെങ്കിൽ അത് നമുക്ക് ത്രെറ്റ് ആയിട്ട് ട്രീറ്റ് ചെയ്യാം. ടാക്സ് റിട്ടേൺ ആണ് ഫയൽ ചെയ്ത് കൊടുത്തത്, ഫിനാൻഷ്യൽസുമായിട്ട് റിലേറ്റ് ചെയ്തിട്ട് യാതൊന്നും ചെയ്തിട്ടില്ല എന്നുണ്ടെങ്കിൽ അവിടെ ത്രെറ്റ് വരില്ല. മനസ്സിലായോ? ഓക്കെ. Then next one is the advocacy threat. So basically, when it comes to advocacy threat, this threat will arise only if the auditor have represented the client company at any point. Consider that the auditor have represented client company for taking a bank loan for the client, or if the auditor have represented client company at a government office, or if the auditor have represented a client company in a board meeting. And in all of this, the auditor, once represented the client, will not be willing to talk against the same client, right? So it will give rise to advocacy threat. So there are no safeguard for advocacy threat. If the client have requested us to represent them at any point, you should not do that. You should politely decline it. The next one is familiarity threat. The familiarity threat arises basically when there is a relationship between auditor and the client company. Consider that the auditor and client are friends, or if the client company is inviting auditor for a party or for a informal meeting. In all this situation, there will be possibility that because of this familiarity, auditor will talk in favor of the client. So that is something called familiarity threat. And intimidation threat will mainly be arising in three situations: when there is coercion, undue influence, or when there is limitation in the scope of audit. Basically, when it comes to coercion, it means threatening. Threatening or basically the auditor might be threatened by the client company to provide a favorable opinion for them. The client might be telling the auditor that they will not be willing to provide audit fees if the auditor have not provided a favorable opinion, or they might be telling that the auditor will not be provided with additional non-audit services or next year's audit if the auditor is not talking in favor of the client company, or if the client company is threatening that they will file a suit against the auditor. So in all these situations, this will give rise to coercion, which comes under the intimidation threat. But it can also be undue influence. Consider that the client company is having somebody who is able to influence us. Say, for example, maybe my parents, maybe my seniors, or maybe somebody I know very well. So if somebody is able to influence me, so that is something called undue influence. When it comes to creating limitation in the scope of audit, it is nothing but the auditor is not provided with sufficient evidence. Auditor is not providing access to all records. The auditor is not provided with sufficient evidences, or if the auditor is not allowed to attend the inventory count. In all this situation, it will give rise to creating limitation in the scope of audit. And in case of intimidation threat, you have to communicate with the management and those charged with governance, and you have to inform them to avoid it. If not, you should consider resigning from the audit engagement. Okay? Is that clear, everyone? Okay. So these are the 5 fundamental issues. Sorry, these are the 5 threats that will affect the fundamental ethical principles. And there is also one additional threat like management threat. So basically, the management threat will arise when the audit client is having some sort of responsibility. However, the auditor is assuming that responsibility as part of audit firm's responsibility. That is something called management threat. Say, for example, well, we know that it is the responsibility of the client company to perform going concern evaluation. and the auditor will be considering whether the evaluation performed by the client is appropriate. But our auditor have himself carried out the going concern evaluation of the client company, considering that it's his responsibility, which will give rise to a management threat. അപ്പോൾ ഒരു ക്ലയന്റിന്റെ റെസ്പോൺസിബിലിറ്റി എന്താണ്, അത് ഓഡിറ്ററിന്റെ റെസ്പോൺസിബിലിറ്റി ആയിട്ട് അസ്യൂം ചെയ്ത് വർക്ക് ചെയ്യുന്നതിനെയാണ് മാനേജ്മെന്റ് ത്രെട്ട് എന്ന് പറയാം. And these are the basic safeguards that we can take in almost all the situation. We can discuss that matter with the client company's audit committee and those charged with governance. We can remove that particular individual from the audit team. We can obtain the external review of the work done. We can rotate the senior person in case if there is any familiarity threat. Then we can use separate team whenever there is self-review threat. We can maintain professional skepticism. We can seek advice from the professional body. We can maintain organizational code of conduct. We can request whatever be the services requested by the client can be politely be declined. We can dispose of the interest in shares immediately. And if at all nothing works, we can consider resigning from the engagement. Then the next situation, we have studied that there are situations where we will be auditing multiple entities in a competent market. Say, for example, we might be responsible for the audit of both the Apple and the Samsung entity. So when there are some entities that trade with each other, like Apple and Intel, they trade with each other, or those entities that compete with each other, and when we are responsible for both the audit, there will be possibility of having ethical threats to objectivity as well as threats to confidentiality. So in this situation, we need to notify all the clients who are being affected by this, and we need to obtain consent from both the clients. And after obtaining consent from both the parties, we need to take additional safeguard. We need to use separate engagement team for both the client, and we should have taken adequate procedures to prevent access to the information. Confidentiality agreement should be signed by all the engagement team members. Then we need to regularly review the safeguards. So that should be done by a senior person. We need to provide advice to the client. And finally, if nothing works, we need to decline the engagement or resign from the engagement. So this is what we need to do. So again, one more time, what are the things we need to do? If we are auditing multiple entities in a competent market, there will be threats to objectivity and confidentiality. So we must notify all the affected clients of the conflict and obtain their consent. Then in case of additional safeguards, as we mentioned, we need to use separate engagement team. There should be procedures to prevent access to information. Confidentiality agreement should be signed. Then regularly we need to review the application of safeguards. It should be done by a senior. And we need to provide advice to the client, and firm must decline or resign from the engagement. And as we studied, engagement partner, engagement quality control reviewer, key audit partner, every one of them will be having a maximum period of 7 years to serve. And once they have served 7 years period, they have to take a cooling off period. So the engagement partner have to take a cooling off period of 5 years. Engagement quality control reviewer need to take a cooling off period of 3 years. Key audit partner have to take a cooling off period of 2 years. So which we have already learned. So now let's do one thing. These were the theoretical areas that we have already learned and properly discussed for multiple days with regarding the area of ethics. And now we will quickly start with a new question from this area. Okay. So last day we have practiced one of the most latest question, Pete's company. And the Pete's company is also having a part C question. So everyone, please do one thing. Please read this paragraph and identify 2 ethical threats which may affect the independence of the Apricot and Co. And for each threat, you need to recommend appropriate safeguard as well. So please go through this scenario and try to pick the ethical threats and the related safeguards. Please start with the question, everyone. So let's start with the question. Pete's company has been an audit client of Apricot and Co. for the last 15 years. The audit staff of Apricot company and the client staff of Pete's company have always enjoyed a meal together at the start of the audit, at the start of the final audit. Alan Edward, the managing director of Pete's company, has this year suggested that instead of the meal, all the audit staff and client staff go away for a weekend to a luxury hotel at the Pete's company's expense. Alan Edward has also suggested that current year's audit fees is negotiated to be based on percentage of Pete's company's net profit for the year. So what are the issues in relation to the first 2 paragraphs?
Gift and hospitality.
Okay. Gift and hospitality. So what's the threat in relation to gift and hospitality?
Self-interest.
Self-interested. Okay. So what's the issue here?
Luxury hotel.
Luxury hotel. So what's the actual problem? So they have clearly mentioned that the client is planning to take us for a weekend getaway to a luxury hotel at the client company's expense itself, right? Okay. So what will be the issue there? You can mention that it creates a threat to, sometimes there can be chances of having multiple threats. Here, this can lead to self-interest as well as familiarity threat. Why?
15 years of.
Not because of 15 years, that can be mentioned as separate threat itself. It's just because they are offering us a gift and hospitality service, right? So when they offer us with a gift and hospitality service, what threat it will be? It's a self-interest threat. In addition to that, they are taking us for a weekend getaway. So we will be having close relationship with them. So what will be the threat there? Familiarity threat. So this can give rise to both the self-interest and familiarity threat. Clear? Okay. Yeah. And what needs to be taken as the safeguard?
Cannot accept.
So you should politely decline, right? So you can mention that. So the auditor should communicate with the apricot and company's auditor. The apricot and company's auditor should communicate with the managing director of each company that they will not be able to accept this offer and they should politely decline it. What else is the issue here?
Familiarity.
Contingency fees.
Yeah, you can mention about the familiarity because they are being audit client for 15 years. So since they are an audit client for 15 years, what will be the related ethical threat there? Long-term relationship with the client will lead to familiarity threat, as the auditor will not be able to act objectively. And what will be the related safeguard? Apricot and company should consider rotating the audit engagement partner and other key persons in the audit engagement. Any person who is having more than 7 years of continuous relation with the audit client should not be involved in the audit engagement, and they should take sufficient cooling off period. Clear?
Yes.
Okay. What else is issue?
Self-interest threat പറയുമ്പോൾ നമ്മൾ substantial in value എന്ന് എഴുതണോ auditor's response?
നിർബന്ധമില്ല, എഴുതിയാലും കുഴപ്പമില്ല. The next one. What's the issue? Next issue.
Contingency.
Yeah, they are offering percentage or contingent fees, right? So they have clearly mentioned that the fees of the speech company's audit will be based on net profit for the year. So what will be the issue there in that case? It will rise to percentage or contingent fees leading to self-review threat, right? Because in case if any mistake are there in the client company's financial statements, especially which affects the net profit of the company, auditor will not be willing to correct the mistake as it might affect the auditor's revenue. So what should be the safeguard?
Prohibited by ACCA.
Prohibited by ACCA. So what should be the safeguard? Apricot and company should inform the audit committee and those charged with governance that the audit fees of the engagement will not be based on percentage or contingent basis. Instead, it should be a fixed amount, or it can also be based on hours spent by the auditor for the purpose of performing the audit. Clear? Yeah. This year, for the first time, Apricot company has been approached by Peach company to help identify potential acquisition targets. Discussions are currently at an early stage and no work has been undertaken at present. The total fee in relation to the audit and other work would fall within the acceptable level in line with ACCA's Code of Ethics and Conduct. What's the other issue?
Self-review threat.
Really? One more time. The self-review threat will arise only if we have performed a work and we are reviewing our own work. That's not the case here. Here, Apricot company have approached. Here the Apricot company have been approached by Peach company to help them to identify a potential acquisition target. So automatically it will be in a mean that we will be representing the client company at a point, right? So what will be the issue in that case?
Advocacy.
It will give rise to advocacy threat, right? Because it might be in a way that we might be promoting Pete's company as an investor. And if you want to mention, you can also mention about the self-review threat as well. Because what is the reason for self-review threat? Directly, it won't be self-review, but indirectly, it will be self-review. How? Once they have acquired the client company, they have to prepare the consolidated financial statements. And we will be responsible for the review of the consolidated financial statements. So in that case, it will give rise to self-review threat. ശരിയല്ലേ? അതായത് ഇവർ അക്യൂർ ചെയ്ത് കഴിയുമ്പോഴത്തേനും അക്യൂസിഷൻ നടത്തിയ കമ്പനിയുടെയും കൂടെ എഫ് എസും കൂടി ഇന്നത് വരും. ആ എഫ് എസ് റിവ്യൂ എന്നുള്ള റെസ്പോൺസിബിലിറ്റി നമ്മുടെ ആയിരിക്കും. അപ്പൊ എന്ത് വരും? സെൽഫ് റിവ്യൂ വരും. മനസ്സിലായോ? Okay. So, what should be the safeguard in this case? അതായത് നമ്മൾ ഈ ക്ലയന്റ് കമ്പനിനെ അക്യൂർ ചെയ്യല്ലേ? ക്ലയന്റ് കമ്പനിനെ അക്യൂർ ചെയ്ത് കഴിയുമ്പോഴത്തേനും, അതായത് ഇവരൊരു അക്യൂസിഷൻ ടാർഗറ്റിനെയാണ് നോക്കുന്നത്. അവരെ അക്യൂർ ചെയ്ത് കഴിയുമ്പോൾ എന്ത് സംഭവിക്കും? ഇവരായിരിക്കും അവരുടെയും കൂടെ ഓഡിറ്റ് പെർഫോം ചെയ്യേണ്ടതായിട്ട് വരിക. അതായത് കൺസോളിഡേറ്റഡ് ഫിനാൻഷ്യൽ സ്റ്റേറ്റ്മെന്റ്സ് ഓഡിറ്റ് ചെയ്യേണ്ടി വരിക. സോ അതെന്തായി മാറും? സെൽഫ് റിവ്യൂ ത്രെട്ടായി മാറും. ക്ലിയർ ആയോ? എന്താ സേഫ് ഗാർഡ് വേണ്ടത്? Yeah, you can take multiple safeguard. The first thing is that if it is solely giving rise to advocacy threat, auditors should politely decline the request raised by the management. However, if the advocacy threat is not directly linked to the service provider, then the auditor should consider using a separate engagement team for performing the engagement. And any members who are involved in that work should not be involved in the audit engagement team. Clear?
Yes, sir.
Yeah. And everyone, please do one thing now. Please read this introductory paragraph. It is 1st July 2015. You are the audit supervisor with M&Co responsible for planning the final audit of a new client, HUD company. For the year ending 30th April 2015, HUD company specializes in design and construction of customized playgrounds. Audit manager recently met with the HUD company's finance director and has provided you with following notes. So as it's mentioned here, they are specializing in design and construction of playgrounds. So please read this paragraph and the requirement and try to pick the answer for that. Everyone, please go through the scenario very well. Got it? At the end of the planning meeting, the finance director of HUD company mentioned to the audit manager that one of the key reasons M&Co was appointed as the auditor was because of its knowledge of the industry. There were some concerns, however, as to M&Co would help keep informed the information obtained during the audit confidential, as its audit 3 other construction companies specializing in environmentally friendly building materials, including HUD company's main competitor. Explain the safeguard which M&Co should implement to ensure that this conflict of interest is appropriately managed. What's the issue here?
Competitors.
Yeah, we are auditing multiple entities in a competent market, right? And they have asked us for the safeguards. So what should be the safeguards which we need to take in that case?
Separate engagement team.
No, before that there is one primary safeguard. What's that?
Confidentiality.
Yeah, we need to obtain consent from both the or all the competitors or all the clients for which we are performing the audit engagement in the same industry. And then we need to consider choosing separate engagement team for both entities. Then what else?
Confidentiality.
They should have signed confidentiality agreement. Then regular review of this safeguard should be done by
A senior.
senior, then we should consider providing independent advice to the client. And in addition to which, we should also consider taking procedures to prevent access to information or procedures to prevent information's access for each engagement team members to the engagement they are not involved. Is that clear, everyone?
Yes.
Okay.
Yes, sir.
So just make one thing very much well aware in your mind. So basically, when it comes to conflict of interest, there is only mainly one conflict of interest about which we are studying in the AA paper. That's auditing multiple entity in a competent market or entity that trade with each other. Okay. Yeah. So that's all about the area of ethics. And next, it's the area of corporate governance. Well, we know that corporate governance is a system by which an organization will be directed and controlled in the interest of the shareholders and stakeholders. So corporate governance will suggest us how we need to run a company in the interest of their shareholders and stakeholders. And there are some corporate governance principles which every company needs to follow. First one is the leadership. And we have studied that every company should be headed by a proper board, and they will be responsible for long-term success of the company. They should not be focusing on short-term success. Every company will be working for long-term success of the company. Then next, we have studied that there should be clear division of responsibility. The person who is running the board should not be the person who is running the company's business. We have studied that the person who runs the board will be the company's chairman, and the person who runs the company's business will be the company's CEO. And the chairman is responsible for the leadership of the board, and he will also be responsible for ensuring the effectiveness. Then, as a member of the unitary board, non-executive directors should continuously challenge the decisions taken by the executive directors. Then we have studied that there should be a balance in the board. There should be equal number of executives and non-executives. The board should be having proper members who are having proper skills, experience, independence, and knowledge. In addition to which, they should be able to use all of this to carry out their duties and responsibilities effectively. The board should be appointing new directors only through formal and rigorous and transparent procedures. Nobody should be chosen as a director without following formal procedures. All directors should be having proper time to discharge their duties. Every director should be provided with induction training. So when a director joins a company, he should be provided with introductory training, and they should be given option to update and refresh their skills and knowledge. Then every director should be provided with adequate information to carry out their duties properly. And every board should be following formal and rigorous annual evaluation of its own performance. So we should regularly review the performance of the board as well as the performance of the board committees. Then every director should be submitted for re-election on regular interval. Say, for example, the maximum period that an director will be able to continue with an engagement will be, or with a client will be for 2 years. And in every 3 years, we should be reappointing them. Accountability. The board should be having balanced and understandable assessment of the company's position and prospects. The board will be responsible for nature and extent of the principal risk arising from the engagement. They should be maintaining a sound risk management and internal control system. The board will be responsible for making sure that the company is having a proper corporate reporting and risk management system. And they should also be keeping relationship with the company auditors. When it comes to remuneration, executives, directors' remuneration should be in such a manner that it promotes the long-term success of the company. The remuneration should not be purely based on just profit and all, because it might make them more prone to look at the company's short-term objectives rather than the long-term objectives. Then there should be formal and transparent procedures for setting up the executive directors' remuneration packages. And no directors should fix their own remuneration. And always keep in mind, remuneration of the directors will always be fixed by a remuneration committee. There's a committee called remuneration committee. They will be responsible for fixing the remuneration of the auditors. Relationship with the shareholders. It is a responsibility of the whole board to maintain dialogue with shareholders, and they will be responsible for maintaining satisfactory dialogue with the shareholders whenever necessary. An annual general meeting should also be conducted on a regular basis, and the investors should be encouraged to participate in the annual general meeting. So these were the basic principles. In addition to which, we have also studied regulations or the corporate governance principles in relation to audit committee as well. So this was what we learned with regarding the same area. So we have studied that every board should be having an audit committee, and within an audit committee, there should be at least 3 members for every company. One should be a financial expert and others 2 should be financially literate. And all members of the audit committee should be independent non-executive directors. And these are the main roles of an audit committee. It is their responsibility to monitor the integrity of the financial statements. They are responsible for reviewing the company's internal financial controls. They are responsible for monitoring and review of the effectiveness of the company's internal audit function. They need to provide recommendations to the board. Then they need to review and monitor the external auditor's independence as well as the objectivity. They need to develop and implement policy on the engagement of the external auditor to supply non-audit services. And they will also be responsible to report to the board about how they have discharged their responsibilities. So these all are the key terms in relation to the UK Corporate Governance Code relating to audit committee. And there should also be another committee called Remuneration Committee. And in the Remuneration Committee also, there should be 100% of non-executive directors. And the Remuneration Committee will be responsible for setting up their remuneration for the directors. Okay. And non-executive directors' remuneration will be always be a fixed amount, and it will not be based on any factors. It will always be a fixed amount for non-executive directors. So now let's do a question called Freesia. So actually, we have already done the question Freesia from the area of internal controls. And now we are going to start with the area of corporate governance. They have given us a scenario in relation to Freesia, and they have told us to identify 2 deficiencies in relation to the corporate governance and 2 recommendations which we need to provide in relation to the corporate governance. So we need to identify the issue and explain why we consider it as a corporate governance weakness. And we need to provide a recommendation to overcome the deficiency. So please start with this question, everyone. So please read this part of the scenario and try to pick the corporate governance deficiencies and the recommendations that we can offer here. So the listing rules of the stock exchange require compliance with corporate governance principle. Directors of Freesia are confident that they are following best practice in relation to this. However, the chair recently received correspondence from the shareholder who is concerned that the company is not fully compliant. The company's finance director has therefore requested a review of the company's compliance with corporate governance principles. So that was an introductory part. Freesia company has been listed for over 8 years and its board comprises 4 executives and 4 independent non-executive directors, excluding the chair. An executive committee comprised of non-executive directors, and the finance director meets each quarter to review company's internal control. Directors' remuneration is fixed by the finance director. NEDs are paid a fixed fee for their service. Executive directors are paid an annual salary as well as significant annual bonus based on Freesia company's profit. The company's chair does not have an executive role, so she has sole responsibility for liaising with the shareholder and answering any of their questions. So what are the issues here?
Recommendation set by finance director.
Okay, the first thing that the audit committee is comprised of NED and the finance director. So the finance director is also part of audit committee. Are the finance directors allowed to be part of audit committee? No. So we have studied that. So you can mention that the finance director is a member of audit committee. However, the audit committee should be comprised of 3 members, and all the members of the audit committee should be non-executive director. And in case if the finance director joins the committee, he will not be able to act independently as he is responsible for the preparation of the financial statements. Clear? And what should be the recommendation in that case?
The finance director.
The finance director should be removed from the audit committee instead of which a new non-executive director who is independent from the company should be appointed. Clear? What's the other issue?
including chair.
Balance another board.
Sorry,
Board balance.
board balanced ആണോ?
Remuneration.
Yeah, board 4 executives and 4 independent non-executives പറഞ്ഞിട്ടുണ്ടല്ലോ. So that's fine. Okay, other than that, yes, the finance director is responsible for fixing the remuneration for the directors. So we have already studied that the remuneration of the directors should be fixed only by the
Remuneration committee.
remuneration committee. What happens when the finance director fixes the remuneration?
Biased.
Yeah, he will be biased. He will be willing to provide higher amount of bonus for himself when he itself is responsible for that, right? So what should be the safeguard? You can write the same point which we discussed earlier. What was it? The remuneration committee should be provided with the responsibility of fixing up the remuneration for each of the executive directors. No director should be involved in designing their own remuneration. Okay. What's the other issue?
Bonus
Combi-
is based on profit.
Yeah,
Column.
bonus is based on Freesia company's profit. So what will happen in that case?
Short-term ആയിട്ടുള്ള കാര്യങ്ങളിൽ കൂടുതലുണ്ടാവും.
Exactly. The executive director's remuneration are based on profit of the company. Therefore, there can be chances that the executive directors might be motivated to focus on the short-term objectives of the company and to obtain higher amount of profit in order to get higher payouts. What should be the recommendation?
Based on long-term
Yeah,
success.
you can mention that the remuneration of the executive should be fixed in such a manner that may promote the long-term success of the company, and it should not be based on short-term objectives. Then, what's the final problem from here?
Sole responsibility.
The chairman is taking the sole responsibility for keeping liaising with the shareholders and answering any of their questions. So we have actually studied the same point. Is it the responsibility of the chairman?
No.
No. The whole board is having responsibility for ensuring that satisfactory dialogue with the shareholders take place. If not, the shareholders might not be getting adequate amount of information relating to the client company. And as a safeguard, you can provide the same thing. The board should ensure that the whole board of directors are taking part of communicating with the shareholders and keeping relationship with them. Clear? Is that clear, everyone?
Yes, sir.
Yes, sir.
So these are the corporate governance weaknesses and recommendations that are there in relation to this question called Freesia. Clear? Yeah. Yes, please.
സാറേ ഒരു ഡൗട്ട്
എക്സ്ക്ലൂഡിങ് ചെയർ എന്നാണ് പറയുന്നത്. അപ്പം
അല്ലെങ്കിൽ നമ്മൾ ചെയർമാനെ ഇൻക്ലൂഡ് ചെയ്യില്ലല്ലോ. ചെയർമാൻ വിൽ ബി ഇൻ ദ മിഡിൽ. ഈക്വൽ നമ്പർ ഓഫ് എക്സിക്യൂട്ടീവ്സ്
ഇൻക്ലൂഡ് ചെയ്തത് ബാലൻസ്
ഈക്വൽ നമ്പർ ഓഫ് എക്സിക്യൂട്ടീവ്സും ഈക്വൽ നമ്പർ ഓഫ് നോൺ എക്സിക്യൂട്ടീവ്സും ആണ് വേണ്ടത്. ആൻഡ് ഇൻ കേസ് എങ്ങാനും നോൺ എക്സിക്യൂട്ടീവ് ഡയറക്ടേഴ്സ് എക്സിക്യൂട്ടീവ് ഡയറക്ടേഴ്സിനെക്കാളും കൂടുതലാണെങ്കിൽ അത് കോർപ്പറേറ്റ് ഗവർണൻസിനെ വീണ്ടും സ്ട്രെങ്തൻ ചെയ്യത്തേ ഉള്ളൂ. കോർപ്പറേറ്റ് ഗവർണൻസ് വീക്ക് ആവില്ല. എക്സിക്യൂട്ടീവ് ഡയറക്ടേഴ്സ് നോൺ എക്സിക്യൂട്ടീവ് ഡയറക്ടേഴ്സിനെക്കാളും കൂടുതൽ വന്നാലാണ് നമ്മൾ അവിടെ ഇഷ്യൂ ആക്കി പറയാം. ഓക്കെ,
അല്ല ഇപ്പൊ ഇൻക്ലൂഡിങ് ചെയർമാൻ വന്നാൽ കുഴപ്പമില്ല. അതായത് ഇപ്പൊ എക്സിക്യൂട്ടീവ് നോൺ
ഇൻക്ലൂഡിംഗ്
എക്സിക്യൂട്ടീവ്
ചെയർമാൻ വന്നു കഴിഞ്ഞാൽ നമ്മൾ പറയാം അഡീഷണലി അപ്പോയിന്റ് ചെയ്യണം.
എങ്ങനെ ഇപ്പൊ അല്ല നോൺ എക്സിക്യൂട്ടീവ് എക്സിക്യൂട്ടീവ് ഈക്വലി ബാലൻസ്ഡ് ആണ്. അത് ഇൻക്ലൂഡിങ് ചെയർമാനും കൂടെ വരുമ്പോ അവര് ബാലൻസ്ഡ് ആണോ? അപ്പൊ ബോർഡ് പല്ലല്ലോ.
അല്ല, ചെയർമാൻ എന്ന് പറയുന്നത് നോൺ എക്സിക്യൂട്ടീവ് ഡയറക്ടർ അല്ലേ?
ഓക്കെ, അപ്പൊ അതും എക്സ്ട്രാ എക്സിക്യൂട്ടീവ് ഡയറക്ടേഴ്സിനെ അപ്പോയിന്റ് ചെയ്യാൻ പറഞ്ഞാൽ പോരെ?
മതി. So next we are going to start with the area of internal controls. So well, we know that internal controls, the topic of internal controls is one of the most important topic of our AA syllabus area. And we have studied all this area. So we'll be having a quick question practice on this area again. And when it comes to the internal controls, we will be getting mainly two set of questions. First of all, there's a possibility of having a question on deficiency. Then they will ask for recommendation. And finally, they will ask us for test of controls. So a detailed video on this is already done in YouTube. You can refer back to the old revision classes to have a thorough discussion on this area. I will share the same link in the group again. So for the time being, we'll quickly brush through the area of internal controls now. So first of all, we need to try to identify the deficiencies from the scenario. So, well, we have 6 systems in total. And in the prior revision classes, we have properly gone through all the 6 systems of the internal control. So, well, we know that we have got the sales system, purchase system, inventory system, cash and bank, then revenue and capital expenditure, payroll, and all these systems are very important. So you can get a question from any of these systems. So the first thing that you need to do is that you need to pick the deficiency from the scenario. And when you pick a deficiency, first of all, you need to identify the deficiency from the scenario. Secondly, you need to explain the deficiency. And finally, you need to show the impact of deficiency on the entity. The impact on entity should also be properly specified. So you need to identify a deficiency, explain it, and you have to show the impact on the client company's entity. Say, for example, consider that the client company have not obtained authorization from the seniors before placing purchase orders. So purchase orders are placed without getting authorization. So you have to identify the issue from the scenario. Purchase orders are not authorized. Then you need to explain that. In case if the purchase orders are not authorized, there can be chances that the employees might place unwanted orders for the company, or there can also be possibilities that employees might purchase products for their own personal use. That will be the explanation. What will be the impact? This would result in unwanted cash outflow for the company. That will be the impact. So you'll be giving the definition right this. Purchase orders are not authorized. Therefore, there can be chances that employees might place orders for their own personal purpose, or unwanted orders might be placed for the company, which would result in unwanted cash outflows and fraudulent purchase. So that will be the deficiency. Then we need to give a recommendation. So what will be our recommendation? What needs to be actually done? So what have to be actually done will be the recommendation. So what have to be actually done here? All the purchase orders of the company should be authorized by a senior official, and any of the unauthorized orders should not be processed further. That will be the recommendation by the auditor. And then we need to test whether this recommendation is being properly operating. So how can we test that? We need to clearly provide a procedure: inquire, inspect, observe, recalculate, examine, analyze, scrutinize. So there should be a procedure like that. Then we need to provide the name of the document, or whatever be the information which we require. Name of document or information have to be provided. And finally, the purpose of the procedure should also be clearly specified. So procedure have to be given, document name or information have to be given, and purpose have to be provided. So consider that definitely you will be talking about a particular recommendation. Whatever be the document about which you were referring in the recommendation part will be the document here. So now you were talking about the purchase order. And what will be your purpose? Your purpose will be always to confirm whether the recommendation provided is actually working. So you have given the recommendation that all the purchase orders should be authorized by a senior official. So it is your responsibility to know whether these purchase orders are being authorized. So what we can do as a procedure, you can mention that obtain a sample of purchase orders to ensure that they are authorized by a senior official, and authorization is evidenced by signature. So we have mentioned the procedure, that is obtain. Document will be copy of a sample of purchase order, and the purpose will be to ensure whether the purchase orders are being authorized. So this will be the deficiency, recommendation, and test of control in this case. Is that clear, everyone?
Yes, sir.
Yeah. And there can also be possibility that they might be asking you for direct control, and they will be ask you to test the control, direct control and their test of controls. So when you're getting question on direct control and their test of control, first of all, you need to provide the direct control in one side. And on the other side, you need to clearly mention the test of controls. So direct controls are the strength in control. There are some situations where an internal control of a company might be operating properly. That is something called direct control. So when you get a direct control, you need to identify the direct controls from the scenario. Secondly, you need to explain how there is a strength in control. And thirdly, you need to show the impact on financial statements mainly. Because their controls are the controls that will help an entity to prevent, detect, and correct the mistakes in the financial statements. So you need to show how it will be affecting the company's financial statements. Here you are showing the impact on entity, and here you will be showing impact on financial statements. And one more difference, here we will be referring to positive impact. Positive impact should be mentioned. And on the other side, when you write the test of control, you will be writing the same procedure. Whatever be the document or information which you can obtain, the name of document or information have to be provided. Plus the purpose for which you are performing this procedure should also be clearly defined. So procedure plus document or information have to be provided, plus the purpose for which you are performing this procedure should also be clearly provided. So we'll be starting with the test of controls and direct controls here. Say, for example, it may be mentioned in the scenario that companies' bank reconciliation statement are prepared on monthly basis. So you'll identify that the bank reconciliation statements are prepared on monthly basis. Therefore, all the unreconciled differences in the cash book and the bank statements will be adjusted. The bank balance of the company will not be under or overstated. That will be the direct control. How can you test it? You can obtain copies of monthly bank reconciliation statement. What's the purpose? In order to confirm whether they are being prepared on monthly basis. So this will be the test of control. Is that clear, everyone?
Yes, sir.
Exactly. Yeah. So now let's start with the question practice. So we'll be practicing a question called Snowden. And there's a reason for practice, because in the question Snowden, we have got points from the area of non-current asset. We have got payroll related points as well as sales and bank related points. So by performing this question, we will be easily be able to revise all these areas together. That's why we are going to start with this question. And it's one of the latest question as well. So you have to pick 3 direct controls and their test of controls from the scenario. In addition to which, you have to pick 5 deficiencies and recommendations as well. So everyone, please start with the question number 220 in the latest Kaplan revision kit called Snowden. So everyone, please start with this question now. So let's start with this question. It is 1st July 2015. You are the audit supervisor with Rocky & Co. reviewing the extract from the internal control documentation in preparation for the interim audit of Snowden Company. The company's year-end is 30th September 2015. The company provides training service for individuals looking to become qualified engineers. Snowden Company's customers are the employers that send their employees for training on weekly basis. Snowden Company runs classes in its 45 centers across the country. Company has small internal audit department which has experienced significant staff shortages and is currently under-resourced. This has resulted in reduction in their program for the work for the year many areas. So they have given us an overview and they have already told us the internal audit department is facing staff shortage. And then they have given us the information in relation to the non-current assets. Snowden Company's training centers are either owned by the company or are held under a long-term lease. Company also has a head office and central warehouse for storage of training materials. Each training center is set up as a separate department and is given annual capital expenditure budget, but some departments have already significantly exceeded their annual budget. When the equipment is acquired, the finance department classifies the expenditure between capital and revenue. Noting the classification on the purchase order, classification is made with reference to guideline established by the finance director, who sample check that the capital or revenue expenditure allocation has been correctly applied. Part of the work which Snowden Company's internal audit department is required to carry out is comparison of assets as per non-current asset register and those physically present in each of the centers. This year's program of visit, which has been planned and carried out on the same basis as previous year, means that by the year end, internal audit will only have visited the 4 largest centers and 5 of the other centers randomly selected. So tell me guys, what all are the strength or deficiencies in this question?
Classification of expenditure between capital and revenue.
Okay. Capitalization of expenditure between capital and revenue expenditure. Is that a strength or a deficiency?
Strength.
Okay, that's a strength. So what's the strength there? How can you consider it as a strength?
Reduce misclassification of expenditure.
Okay, that will reduce the misclassification of expenditure. So which will be the accounting area affected by that? Profit and the company's
Asset.
asset. That will not be under or overstated, right? So that is what you can state then. So you can mention that the capital expenditure on purchase orders are classified by the finance director properly between revenue and capital expenditure using the guidelines provided by the finance director. Therefore, the finance director checks on sample basis whether the classification is correctly applied. So, since the guidelines are appropriately being used by the members, there won't be misclassification between the capital and revenue expenditure. Therefore, the company will be able to ensure that the profit and the asset value is not under or overstated. And what should be the test of control? How can we test that?
Breakdown review.
Sorry?
Breakdown review.
Breakdown. Response we are not mentioning the auditor's response. We are doing the test of controls. We need to know whether the controls are undertaken properly.
Obtain a
Sample of orders.
capital expenditure.
So we
And
will
check-
obtain sample of orders, and what we need to do?
Compare the classification.
Because it's correctly made.
All right, good. So we can obtain samples of orders, and we can compare the classification against the note provided by the finance director. So these guidelines can be compared to confirm that the classification in the financial statements have been appropriately done. Perfect. Then what else is issue here?
My annual budget is significantly exceeding on capital
Okay, the
expenditure.
annual budget of the company is significantly exceeding. So is that a strength or a deficiency?
Deficiency.
Okay, it's a deficiency. So what will be the deficiency in this case? What will be the deficiency in this case?
The control is not properly working. Their budget is exceeding.
Okay, fine. The control is not properly working. All right. So you can mention that. Some departments have already significantly exceeded their capital expenditure budget. Therefore, there can be chances that the company might be spending in excess to what they are actually required to spend. So increasing expenditure may resulting unwanted cash outflow for the company and reducing profit of the company. And what should be the response? The recommendation.
The annual budget should be reviewed by a senior management.
Okay, then.
And if any significant exceedance is there.
Okay, fine. So you can mention that. Okay, you can mention that. The senior members should be responsible to review the capital purchase orders, and it should be compared to the annual budget of the company in order to confirm that they are not exceeding the limit fixed by the finance director. Clear? Okay. What else?
Staff shortage.
Yeah, they have clearly mentioned that the company's internal audit department is very small and they are experiencing significant staff shortages. So what happens when an internal audit team is facing significant staff shortages?
The control
Affect
will
the
not
effectiveness of
The controls of the company might not be operating effectively, and the company will not be able to take corrective action if the internal control system are weak, which would result in control risk leading to fraudulent transactions and possibility of having unwanted cash outflows for the company. And what we can take as a recommendation here?
company can recruit additional.
Yeah, you should consider that. Snowden company should consider appointing additional team members to the internal audit department, and the existing team members should be provided with adequate training. Clear? Is that clear, everyone?
Yes,
Yes.
sir.
Yeah. Is there any other problem from the same system?
The internal audit department is not carrying out the count.
Okay, the internal audit department is not carrying out the physical verification of the assets. So what will happen in this case? Hmm?
The
So they have
verification.
clearly specified
Assets
that the internal audit
misappropriated.
department is not appropriately taking the verification of the assets each year, and they will only be considering 4 large centers on the basis of the random selection. However, they have clearly mentioned in the introductory paragraph that company have got 45 centers in total, right? So if the non-current asset registry is not maintained, and if it is not cross-checked against the physical existence of the company's assets, there can be chances of having obsolete asset, and the value of assets will not be able to be confirmed by the client company. What should be the recommendation?
Physical verification should be done.
First of all, what we need to do, why they are not performing physical verification? Because of the lack of
Shortage,
resources, right? So what they need to do, the internal audit department should consider hiring additional resources in order to perform the verification of the physical existence of asset, and it should be done on regular basis. And for the year end, the assets which are held in the books should be compared to the physical assets that are held in the company's premises. Is that clear?
Yes, sir.
All right. Okay. Then, Snowden company has a human resource department responsible for setting up all new joiners. Pre-printed joiners form which require all necessary data are completed by the HR for new employees, and once verified, a copy is sent to payroll department so that the employees can set up for payment. The joiners form includes staff members, assigned employee number, and the system requires new joiners' employee number to be entered before they can be added to the payroll. All members of the payroll department can amend the employee standing data in the payroll system, as they have access to the password, which is changed by the payroll director on a quarterly basis. On monthly basis, the employees are paid by bank transfer. Senior payroll manager reviews the list of bank payment and agrees this to payroll record. If any discrepancies are noted, then the senior manager always makes the adjustment in the payroll records. So what are the other strength and weakness in this paragraph?
HR department are joining the newcomers.
Perfect. The first strength is that there is proper segregation of duty between the human resource department and the payroll department. Therefore, the possibilities of having fictitious employees and fraudulent transactions can be avoided. The payroll cost will not be overstated. What should be the test of control for that?
Job description review change.
Job description. Whose job description?
HR and payroll.
Okay. So you can review the job description of the HR and the payroll department staff members in order to confirm that their duties are being properly segregated. Or else you can also do one thing. You can inquire a sample of newly appointed employees, whether they are being appointed by the members of human resource department. Clear? Is that clear, everyone?
Yes, sir.
Okay. So what's the other issue?
Employee standing data can access to all members.
Okay. The employee standing data can be accessed by all the members as they are having access to the password. So what will be the issue in that case?
Fraudulent.
Unauthorized changes being made.
Exactly. All members are being provided with the access to the payroll master data or standing data. Therefore, there can be chances of having unauthorized changes being made to the payroll system, which might cause errors, and incorrect payments might be made to the employees, resulting in unwanted cash outflows or employee dissatisfaction. And what should be the recommendation?
Standing data is only allowed by seniors.
Yeah, the passwords for the payroll system should be changed on regular basis, and it should be provided only to senior members. Any members other than the senior team members should not be provided with the access to the employee standing data. Then what else? Any other problem here?
Direct control.
Payroll record
Payroll record?
അഗ്രി പേറോൾ റെക്കോർഡ് പേയ്മെന്റ് ചെയ്യുന്ന സമയത്ത് പേറോൾ റെക്കോർഡ് വെച്ചിട്ടാണ് അഗ്രി ചെയ്യുന്നത്. അപ്പൊ ഇൻഡിവിജ്വൽ ബാലൻസ് ചെക്ക് ചെയ്യാൻ പറ്റില്ല.
Okay, fine. On monthly basis, employees are paid by bank transfer. Senior manager reviews list of bank payments and agree this to the payroll records. But they haven't mentioned that they are reviewing the total amount of the payment list. If they have provided the total amount of the payment list, then we can mention that, or else we are not required to do that. Okay. But there's another issue relating to the same paragraph.
Segregation of
Segregation of
Lack of segregation of duties, right? Because the payroll manager reviews the list of bank payments and agree to the payroll records, and he itself is responsible for reviewing the making adjustment in the payroll records. So he's a person who reviews, authorizes, and at the same time, he's a person who is responsible for adjusting the mistake. So there's lack of segregation of duty. And what will be the cause? Therefore, there can be chances of having
fraudulent activity.
fraudulent activities. And what will be the further reason which will lead to
Unwanted
unwanted cash outflows for the company? And what should be the recommendation? There should be clear segregation between the persons who performs the review and authorization of the payroll records, and they should not be involved in the process of making adjustments in the payroll records, and this should be allocated to different staff members. Clear?
Yes, sir.
Yeah. Then is there any other strength or deficiency from the same paragraph? Any strength?
Unique number കൊടുക്കുന്നത്.
Exactly. They have clearly specified that the joiners form is being prepared by them. So once a new employee is set up for payment, the joiner form will include staff members assigned employee number, and the new employee number will be entered before they can be added to the payroll. So what will be the benefit in that case?
Fictitious
Fictitious
employees നെ
employee
prevent ചെയ്യാം.
payment കൊടുക്കുന്നത്.
Exactly. Fictitious employees in payment avoid. So we can mention that pre-printed forms are being used by the HR department while they appoint a new employee, and it contains unique number as well as the employee name will be entered before entering into the system. Therefore, any new employees or joiners who join without having proper forms can be traced, and it will reduce the possibility of having fictitious employees, and unwanted cash outflows can be avoided. Therefore, the payroll balance will not be overstated. What we can do as the test of control there?
Attempt to add a new employee without unique number.
Okay, we can attempt to add a new employee without a unique employee number. And if the system rejects it, we will be able to confirm whether they have properly followed the system. And what should be the most important one? Well, we need to confirm whether they are actually preparing that pre-printed order form, right? So what we can do? More easily, we can do one thing: obtain the copies of pre-printed forms for a sample of employees who have been appointed recently, in order to confirm that the HR department are preparing pre-printed order forms for all new joiners for the year. Clear?
Yes, sir.
Sales and bank. After passing a credit card check, new customers are set up in the receipts ledger master file, and a credit limit is set up by the sales director. The credit limit then remain unchanged in the system unless a review is requested by the customer. Each new customer is allocated a client service manager from Snowden company, who is responsible for managing the customer relationship and maximizing sales. Standard credit term for the customers are 30 days, and a monthly basis sales invoice which are over 90 days outstanding are notified to the relevant service manager to chase payment directly with the customer. Every month, the cashier reconciles the bank statements to the cash book. The reconciliations are reviewed by the finance controller, who also investigate all reconciling items and evidences his review by the way of signature. So what are the strengths and deficiencies here?
Credit
Credit
limit
limit
is
set ചെയ്യുന്ന
unchanged
senior manager.
and the customer is requested to.
Sorry?
Credit limit is unchanged unless a customer is requested.
Okay, so is that a strength or a deficiency?
Efficiency.
Efficiency. You can mention that the credit limits for the customers are not reviewed unless it's being requested by the customers. Therefore, there can be chances of having variance in the customer's credit abilities. And if these are not being reduced on regular basis, either it might result in providing goods on credit to poor credit customers, resulting in bad and doubtful debts, or there can be also be chances that providing low credit limit might result in loss of revenue for the company. So what you can provide as a recommendation?
More frequent credit limit change.
Credit limit for the customers should be reviewed on more frequent basis, and whenever necessary, credit limit should be immediately updated. Then what else is issue? Any other problem?
After chase ചെയ്യുന്നത് actually 30 days ആണ് limiting.
Okay, they have given a standard credit term of 30 days for the customers, but they're chasing the invoices only after 90 days, right? So what will be the issue if the credit terms are being, if the outstanding balances are being traced out on a later date?
We can't chase the payment resulting to
Bad and doubtful debt.
Exactly. Yeah, you can mention the same sentence there. The client are being offered with a standard credit term of 30 days. However, the payments are being traced only after 90 days. Therefore, there can be chances that the customer might not be willing to pay the amount outstanding to the company. Therefore, this would result in irrecoverable debt and reduced profit and cash flow for the company. What should be the recommendation?
30 days മുകളിൽ തന്നെ chase ചെയ്യാം.
There is no credit controller. So you can mention that a credit controller should be appointed in the client company, and they should be provided with the task of chasing all the payments once the credit term of the 30 days exceeded. Is that clear, everyone?
Yes, sir.
Okay. Any other points?
Reconciliation ചെയ്യുന്നുണ്ട്.
Yes. They have clearly mentioned that every month cashier reconcile the bank statement to the cash book, and the reconciliations are reviewed by the finance director, who also investigate all reconciling item and evidences by his way of signature, by the way of his signature. So is that a strength or a deficiency?
strength.
It's a strength. So you can mention that the cashier reconciles the bank statements to the cash book on monthly basis, and the reconciliation is reviewed and investigated by the finance controller, and he evidences the review by the way of his signature. So the bank reconciliation statement will make sure that there are no unreconciled differences between the cash book and the bank statements. Therefore, the bank balance will not be under or overstated. What will be the test of control?
Obtain
Review the
reconciliation.
reconciliation.
Obtain the copies of monthly bank reconciliation to confirm they are being prepared on monthly basis, and the review by the finance controller is evidenced by signature. Is that clear, everyone?
Yes, sir.
So,
So these all are the set of strength and deficiencies, as well as direct controls and test of controls in this question. So when you get this sort of questions, make sure that you're clearly sticking on to the scenario. Okay. So you should first of all go through the whole scenario. You have to pick all the deficiencies and the recommendations required, as well as you have to pick all the direct controls and the test of controls. And after identifying all of this, you have to write according to the scenario. If they have asked us for 4 deficiency and recommendation, write the best 4 deficiency and recommendation which you are familiar with. And if they are asking for 5 strength and test of control, you should only be providing exactly 5 strength and test of control. You should not give any additional point other than the points which they have actually required you to write. Okay. All right. So now let's start with our next set of questions. That will be the MCQ questions. So we are going to start with an MCQ question from the same area which we learned today. That's the area of ethics. So everyone, please select the question number 26 to 30 in the latest Kaplan revision kit. So you've got some questions, 5 questions from the same scenario. So please go through this scenario and please try to pick all the answers for the MCQ questions that have been asked. So it's in the latest Kaplan revision kit. It's in file number 35. Okay. So start with question number 26 to 30 now. First of all, read the scenario. Everyone, please go through the scenario very well. And after that, go through each of the requirement and please try to select all the correct answers in the multiple choice question. And after that, we will discuss it. Okay. So please start with this question, everyone. So let's start with the scenario. Skymore & Co. is an auditor of FIR and Company, a listed company operating in a computer software industry. The audit team comprises an engagement partner, a recently appointed audit manager, an audit senior, a number of audit assistants. The audit engagement partner has only been appointed this year due to the rotation of the previous partner who had been involved in the audit for 7 years. Only the audit senior has experience of auditing a company in this specialized industry. The previous audit manager left the firm before the completion of the prior year audit and is now the finance director of FIN company. The finance director and the new audit manager are good friends. So they have given us a lot of information. First thing is that audit team is comprising of engagement partner and with a newly appointed audit manager. They have clearly mentioned that the prior partner was rotated because of their long-term relation with the client. And they have mentioned very specifically that only one audit senior is having experience in relation to this industry. And the audit manager left the company prior year and he have joined as a finance director. And the audit manager of the current entity and the finance director are now good friends. The board of F has asked if this company can take some additional work. Following additional non-audit services have been requested. Routine maintenance of payroll record, assistance with the selection of non-executive directors, tax services whereby Skymore & Co. would liaise with the tax authority of F company. So these are the additional works that are being requested by them. Skymore have identified that the current year's audit fees received from F for the year and the other services will represent 16% of the firm's total income and total 15.5% in the prior year. Okay, for the current year, it's 16% of their income. And for the prior year, it's 15.5% of the income. The audit engagement partner has asked you to consider what can be done in relation to self-interest rate. So they have asked what you need to take action in relation to the self-interest rates. So let's start with the scenario now. In relation to the composition of the current audit team, select which of the fundamental principle is at risk and select an appropriate safeguard. So on the basis of the scenario which we have received, what will be the threat here, or what will be the issue that might affect the professional ethical principles?
Professional competence and due care.
Yeah, professional competence and due care will be affected. Why?
Experienced team, 1 year experience.
Exactly, because they have clearly specified that it's not an experienced team. So automatically professional competence and due care will be affected. And what should be the safeguard in that case?
Provide industry.
Provide training.
When the audit team lacks experience, what we need to do? We need to provide industry training for the team members. Clear, everyone?
Yes, sir.
Yes.
Yeah. Second question. Which type of threat which would arise as a result of the finance director's relationship with the audit manager? Select an appropriate safeguard. What will be the ethical threat that might be arising because of the relationship between the audit manager and the finance director?
Familiarity.
Yeah, it will be familiarity threat. And what should be the safeguard in case of familiarity threat?
A different audit manager should be appointed.
Exactly. We have to appoint a different audit manager. Yeah. Ignoring the potential effect of the total audit fee level, identify the threats to independence from providing non-audit services. Routine maintenance of payroll services. What will be the threat?
Self-review.
Yeah, because we will be responsible for reviewing the payroll record during the time of audit. So that will give rise to self-review threat. Assistance with the selection of a non-executive director. What will be the threat?
Self-interest.
Self-interest, because appointment or the recruitment will result in self-interest rate. Tax services by Skymore & Co. would liaise with the tax authority on FA company's behalf.
Advocacy.
Advocacy threat, because we are representing the client company. Which of the following safeguard would not be relevant in mitigating the threat identified in relation to fees? Which of the following safeguard is not a relevant measure? First of all, disclosing to those charged with governance that the fee represents more than 15%. Is that an appropriate safeguard? Yes. Pre-issuance review to be conducted?
Yes.
Yeah. Assigning engagement quality control reviewer?
Yes.
Use of separate team to provide the audit and non-audit services. Is that an appropriate safeguard?
No.
No, because we will be using separate engagement team when there is self-review threat, right? Not in case of self-interest threat. And the final one, during the course of audit of F company, suspicious cash transfer has been identified. The audit team has reported this to relevant firm representing as a potential money laundering transaction. Which of the following statement is true regarding the confidentiality for this information? Which of the following statement is true?
If there is a legal requirement to the report money laundering.
Exactly. If there is a legal requirement to report money laundering, overrides the principle of confidentiality. We have studied that there are two cases where we can override the principle of confidentiality. One in case of approval from the client, and second in case of any legal and professional duty. So it's a legal and professional duty. So you can override the principle of confidentiality in this case. Is that clear, everyone?
Yes, sir.
Perfect. So let's start with the next question. So now we'll be starting with the question from 171 to 175. So please start with the question from 171 to 175. So let's start with the scenario. It is 1st July 2015. You are the audit manager in Yellow Submarine Co., responsible for the audit in Magical Mystery Tour. The audit is nearing completion and the audit report is due to be signed next week. MMT is a travel agency which has been in trading for over 5 years. The company arranges holiday and hotel booking in remote location to individual customers and corporate clients. The company is financed partially through overdraft and loans and also by several large shareholders. Overdraft facility is due for renewal later in July 2015. In Jan 2015, a new competitor, Pure Shows Company, entered the market. Through competitive pricing, Pure Shows Company has gained considerable market share from MMT, including one of MMT's larger corporate client, which has moved its business to Pure Shows. In addition, number of MMT's travel agents have left the company and joined Pure Shows. MMT has found it's difficult to replace these employees due to the level of skills and knowledge of remote overseas locations required. The directors have produced a cash flow forecast which shows a significant worsening position over coming 12 months. You have been informed MMT's bankers will not be making a decision on renewal of the overdraft facility until after the audit report is signed or issued. The directors have agreed to include brief disclosures of the uncertainty over going concern. So they are mentioning us about the uncertainties in relation to the going concern of the company. So the first question, 3 of the following statement correctly describes the respective responsibility of now directors and auditors in relation to going concern. So they have asked us which of the following are either the responsibility of an auditor or a director. So the first one, director must assess whether the company can continue to trade for foreseeable future. Is that the duty of either a director or an auditor?
Yes.
Director's duty, right? Yeah. The auditors and the directors must make disclosure of going concern uncertainty in the financial statements. Is that true?
No.
No.
No, it is the responsibility of only the
Director.
directors.
Directors.
So it's not correct. Auditor will evaluate management's assessment of going concern.
True.
Yeah. Director will usually prepare a forecast profit to assess whether the company is likely to be able to trade for foreseeable future.
False.
Is it false? Who will prepare the cash flow forecast to assess whether the company will be having future cash flows to continue its operation?
Directors.
Director.
Directors. That's a statement here, right? So it's true. Directors must assess a period of at least 12 months from the date of financial statements are issued.
No.
No, it's from the date on which the financial statements year end is. Year end to the next 1 year will be considered, not from the date on which financials are issued, right? So these are the correct answers. Which 3 of the following procedures should be performed to assess uncertainty arising in relation to overdraft renewal? Calculate key ratios to identify possible financial problem. Will there be any benefit of considering the ratios in order to understand whether there will be overdraft renewal? No. Inspect correspondence with the bank.
Yes.
Yes. Review the level of profit made in the previous period. Will there be any benefit?
No.
No. Inquire with the management whether there are any alternative sources of finance that have considered if the bank does not renew the overdraft facility.
Yes. Yes.
Inspect the board minutes of discussion of the management as how they plan to improve the financial position of MMT.
Yes.
Yes.
Then, what will be the impact on auditor's report of MMT in the following circumstances? Okay. Adequate disclosure of going concern uncertainty is made. So in that case, what should be the opinion we have studied in the last day?
Unmodified opinion.
Yeah,
going
unmodified opinion can be provided with going concern session. Adequate disclosure of going concern uncertainty is not made. So if the going concern assumption is inappropriate, what will be the opinion?
Modified.
Modified.
Because we need to express either a qualified opinion or adverse opinion. Then, in which of the following situations should a company not prepare financial statements using breakup basis?
The company has
Company
run out of cash.
Sorry?
The company has run out of cash and is unable to pay its debts.
Very sure. Which of the following situation companies should not prepare the financial statements in going concern basis? First one, company has ceased the trading. Company is not able to continue and they have discontinued their trade. Definitely they have to prepare the breakup basis. Decision has been made to close the company. Breakup basis again. Company has run out of cash and it's unable to pay its debt. Breakup basis. When there are uncertainty relating to going concern, they can prepare the financial statements in going concern basis, but they have to disclose about the uncertainty in the financial statements. That's the only thing, right? Yeah. So that's the answer. What will be the impact on the auditor's report of MMT if the auditor believes that the basis of preparation of financial statements is incorrect? Which means if the going concern basis is inappropriate, which will be the opinion that will be expressed by the auditor?
Adverse opinion.
Adverse opinion with a basis for adverse opinion. Is that clear, everyone?
Yes, sir.
Yeah. So these are the areas which we have to practice and which we have actually planned to practice as part of our marathon session. So we have gone through almost all the areas, which means all the theoretical areas, all the questionable areas, especially in the descriptive session, which includes areas of audit risk, reporting, as well as we have discussed the area of internal controls. Again, we have gone through the areas of few multiple choice questions and more. So we will be practicing much more MCQ questions in our more regular sessions in the upcoming days. So this is the end of the marathon session. So everyone, please make sure that you are having a proper idea on all these sort of questions. And especially when it comes to the area of audit risk and internal controls, practice as much as questions as possible. Because definitely when it comes to these areas, we will be having more and more repetitive points during the course of our exam. So in order to cope up with the descriptive questions, we need to have good amount of practice. So please practice all these sort of questions for maximum number of times. So I believe this session was effective for everyone. Well, as we know, we have taken more than 50 days of live session when it comes to the regular classes. And in addition to that, we were also be having the revision classes. And this marathon session was a summary for all these sessions which we have already taken. So we were going through all these areas very quickly. So I believe you have got an overall understanding about these areas. So please do practice maximum number of times all the questions that we already practiced as well as the other questions in the revision kit, and focus on the most latest questions first and later on move on to the other areas. So all the very best, everyone. Do well for the exam, practice maximum number of times, study very well, revise the areas of substantives very well, have to give the answers of substantives in accordance with the scenario, and always focus on the requirement very well. So that's it, guys. Thank you so much. All the very best. Thank you. Bye.